Hey traders, welcome back to another Sunday video where we talk about trading setups for the week ahead. And I wanted to start out by just doing a little bit of a personal performance kind of update video here just to start out. I'm up about $24,000 on my trading account so far this year. And while, this is a great return overall, I've actually been missing out a little bit on some of the index runs that have been going on. And you guys know I love trading the indices, but I have been able to still make a pretty nice profit here in the meantime, trading pretty much exclusively things like gold, oil, and silver. So if you've been watching me, then it's kind of cool to see this. I've been trading almost exclusively those things, plus my options strategy, which if you know, I've traded options for some time now, and it is a very nice complement to my momentum style trading. Anyways, there's where we are so far for the year 2024. And let me also mention, I had a comment recently on one of my videos where somebody said, hey, Nick, you're just showing your trading performance just to gloat. And let me mention a few things really quick as we get started. Number one, I am absolutely, that is correct. I am proud of my results. I've worked really hard to get to the point where I'm at as a trader. I mean, this is for me, this is an 8-year long journey. I've really invested most of my career into doing this. I've spent countless hours. So please understand those results did not happen overnight, first of all. Second of all, I think it's important for the industry that people show their accounts, people show transparency. I'm not here making, $1 million a month or anything like that, but those are really strong numbers and I'm very proud of them. And I imagine that over time, they'll continue to go up. And if you guys take them as bragging, I encourage you, please, to just not watch my channel because I'm really not trying to just kind of flex on people. I'm proud of those results, like I said, but it is a purpose of showing to add value to my content. I think there is genuine value in sharing. I'm long gold. This is part of the oh, sorry, my cat just screamed. I don't know if you guys could hear that. Gold is doing quite well for me, and I continue to hold GLD. This is the ETF that I own. So we are up, floating around $6,200 so far. So a lot of people are probably wondering, is gold going to continue from here? It's had this huge run up. Is it time to cool off? And is there something to read into with this little wick that we had towards the end of the week? Well, here's my personal opinion. I made a video like over here when it had run up just about why the gold market could keep going. I mentioned that things like, you have conflict in the Middle East, you have rate cuts potentially coming. And real quick, I'll just write that up and show you guys. Okay, guys, so I went Khan Academy on you guys. I don't know if you've heard of that or seen that guy on YouTube, but he does like tutorials on everything. He writes all over his screen. Anyways, a couple things I wanted to point out. Can gold continue? And a lot of people are going to wonder this because a lot of you guys trade gold, and obviously so do I. Here's the thing. There's a lot of factors in favor for gold supporting this price action. A lot of people are going to say this is irrational, manipulated, overbought. I'm going to say it's justified. Now, let me explain. Rates. Interest rates are now expected more likely than in recent months to come down sooner. Why? Economic data has been cool. We had a jobs data point on Friday, which was really kind of a showcasing that the jobs market's got some slow in it. All of those things are going to encourage the Fed, hey, it's time to cut rates. Geopolitics. We all know what's going on in the Middle East. We all know what's going on between potentially Taiwan and China, and then also, of course, Ukraine and Russia. There is geopolitics all over the globe right now, and that tension has people worried. There's also, and I should add also, banks, okay? There's a little bit of something going on. Last year, when we had some banks kind of collapse in the United States, they were regional banks, but some of them were pretty big, and that collapse caused gold to rocket hard. Well, recently we've seen some concerns resurface about the banks, and that's going to again contribute to perhaps the Fed thinking about let's cut rates sooner so we don't get any banks in trouble. So the narrative here very much suits gold running up on both fear and the idea of cutting rates. The next one I'm going to show you guys in a second. Fascinating. COT data revealed something big. I'll show that to you in just a moment. And just a general theme of risk off. We see bonds going up as well as gold. And we saw the stock market sell off on Friday. So to me, the scene is set for a little bit of a continuation on gold. Now, let me add, before I get into the commitment of traders data, before I do that, let me just add, this doesn't necessarily mean I'm saying, oh, now's the time to buy gold. You don't chase a market, but you accept sometimes that, hey, I might have missed the move. Let me show you the trade that I'm in and explain something. I didn't buy this. after the run up. I bought it on a nice technical move. We started to see higher lows, and on this breakout, this retest, this is where I got into the trade initially. The market chopped sideways and finally started to break out with some meaningful momentum. And what I've done is these levels that you see on my screen that I've drawn, I've basically trailed stops along the way. That's why this trade has become a really good winner for me. But let me say something to people who feel FOMO. I feel FOMO too right now on the Nasdaq. I missed the Nasdaq move, one of my favorite things to trade. But here's a kind of a word of wisdom for you. Markets don't move like this forever. They will trend sideways. They will pull back at some time. Will that be on Monday? Maybe not. Maybe it'll be, after another week of run up, then we see the pullback. But be patient. It's really, really important to your trading success. Trust me, if you're chasing things, if you're making rash decisions, it's going to get ugly. I'll come back to the Nasdaq in just a second, but let me go ahead and just go through the COT data with you guys because it was a good one. Check this out. So commitment of traders data shows us what institutional money is buying and selling week to week, and longer term, we get their net positioning. Gold remains number one, oil number two. I'm long both of these things. It's not the only reason I'm long these things. As I just mentioned, there's several factors that I think are very bullish for gold right now. Silver also ticked up pretty good too. And check this out. Let's go through the metals really quick. Silver, big increase in institutional money. Gold, big increase in institutional bullish positioning. What we have here, guys, is we have a movement that's happening and also being supported by institutional money. That's what I absolutely love to see when I'm in a long position myself. Oil, same thing, a very nice increase on net bullish positioning. Let's take a look at some of our other players here. We have the Canadian dollar, platinum, Kiwi, Swiss, the Nasdaq getting sold hard last week. Very, very interesting considering I want to come to the Nasdaq next. You're seeing some selling on the Nasdaq, selling on the Dow. Meanwhile, people are going into, they're going into gold, they're going into oil, etc. So definitely something to watch out for. Also, before we move on, let me just remind you that our sale on the EdgeFinder for 20% off is ending right now. It is ending very, very soon. If you guys have been watching my videos for a while, you're a fan of the videos, and you want the tools that I use, please consider picking up a copy. It is worth the price. I very much have made my case on this many times, but let me just be very brief. The EdgeFinder has helped me catch so many great trades. It's also helped me catch or stay out of so many poor ones. The EdgeFinder is your data playground. And if you don't have a playground of data in today's markets, in my opinion, you are trading like you're trying to swim up a river. Okay. So if you've been watching my videos for a while and you've been thinking about getting a copy of the EdgeFinder, let me encourage you. Today's the day. Pick up a copy, start playing around with it. It is worth the money. I am very confident. I've used it in my own trading, of course. Frank, my person on my staff, who's helped me build this tool over the years. We continue to add new things every single day to this tool, and it's only getting better from here. So check it out. We are planning on raising some prices or adjusting our pricing. So please know this is a one-time fee that you pay right now. It's 20% off, and then it is yours for the keeping. And the Nasdaq closed out last week with actually a negative gain. Let's take a look at the weekly chart. You can see it wasn't much, but these days this is about the most pullback you're going to get when it comes to the Nasdaq. It just keeps running higher anyways. We had a big, kind of volatile week, but it does seem like the post-jobs data kind of pushed the Nasdaq down. Now, let me say that on the actual number, you had kind of some volatility, but it seems like after the dust settled, markets are a little bit concerned that, hey, jobs data being bad, sure, maybe that means, the Fed is going to cut rates. But if they have to cut rates because the job market is sliding, because perhaps businesses are more struggling than people thought, that could actually be a negative thing for the Nasdaq. We've seen recently, at least, Nasdaq, S&P, these things have been rallying on good jobs numbers. So it does kind of make sense that we saw a little bit more of a weakness here on poor jobs numbers on Friday. If you missed, by the way, the jobs data recap that I did, I uploaded a video on Friday. Feel free to go watch that video after this one if you want the full rundown and explanation to just how important that NFP number really was. So as we look at the Nasdaq on a daily chart, here's my personal opinion. This thing totally can keep running, but personally, I'm waiting for a signal from the EdgeFinder. And what do I mean by that? Well, if I go to the top setups page, the EdgeFinder has this page, the top setups algorithm. It is a system that computes all of the different data that's being pulled in by the system. So our system goes and it scrapes a bunch of data from all over the place, sorts it out, cleans it up, puts it into the EdgeFinder. Then the EdgeFinder's scoring algorithm will then kind of interpret each thing as a bullish, bearish, and assign a score, which is ultimately how we get the readings here on the far left. There is a lot that goes into generating bullish and bearish setups, and that is why, of course, the tool is so helpful. It does many of the steps that you would have to do manually and take, an hour to do. So gold is still a bullish read, but what you'll notice is that the Nasdaq and S&P are not. So there's SPX, there's the Nasdaq. These things are getting more weak readings here, and so we see mixed sentiment across some of these the algorithm's findings. So for me, until we get like kind of a more strong read, or at least a higher neutral read, I can't really touch the indices. And in my personal view, I do think that they are also due for a bit of a pullback. We've had just a crazy run. And I also know indices don't run up forever like this. And a lot of people are very convinced that they do nowadays. Remember, there are periods of time where the indices are not, perfectly going up. And if you get caught thinking that they will, you can lose a lot of money during those tougher periods in the market. The dollar index is up next. We could take a look at the daily chart, and you could see that things just are not looking pretty for the dollar index. And you might be asking, Nick, you were bullish on the dollar. Is there still something here? Should we be watching it differently? Here's my opinion. We have lost the steam, the momentum that was here for the dollar. And let me explain. We can do it through the technicals. Technical is very, very obvious here, right? You have kind of a clear level of what was support, and then price wasn't able to hold it here, and then it wasn't able to hold it here. So we've seen price action-wise some failure on part of the dollar, but there's something more. The fundamentals really explain why this has fallen apart. First of all, you had jobs, right? Jobs did not come out very strong, and you need really strong jobs to keep the narrative up that Fed's going to keep interest rates higher for longer. If the jobs slide, then so does the dollar. And so that has been kind of that's the number one, the A1, if you will, point as to why this market is rolling over. But there's more. You had PMI numbers. Now, PMI numbers, I always like to remind everybody, these are the Purchasing Managers Index. It asks a bunch of people. It's like if you asked a bunch of hiring managers, a bunch of people that make decisions for companies. If you ask them all, hey, how are you feeling about hiring? How are you feeling about spending? A bunch of survey questions. If those results look negative, which they did, that is also a lag or kind of a lagging effect to this idea that, hey, we're going to get strong economic numbers and it's going to keep going. I was very much convinced that, hey, the economy was going to stay really, really strong. And it did for a while. We made some money on the way up here on the dollar index. However, as numbers have rolled out, I have abandoned ship on that. I'm not infinitely loyal to one side of any trade. Right now, I'm bullish gold. Right now, I'm bearish dollar. Right now, I'm neutral on the indices. But all of those things change, and really, they usually change alongside the EdgeFinder, which has built in all of the things that I'm just talking about, right? Those PMI numbers came out, and they impacted the economy score, right? So what you have to understand is the EdgeFinder is thinking through all of that data automatically, but intuitively, as I speak about it, you're getting some slide in the numbers. You had consumer sentiment also was weak. You had GDP numbers here recently, the preliminary GDP kind of disappointed. You just had a round of economic data that just was lackluster. And now with price action kind of confirming the idea, it's time, in my view, to stay more on the bearish side of the dollar until further notice. It's why I'm literally long gold, right? So my money is where my mouth is here as we speak on the dollar index. So for me, if you're watching the dollar index, where can we go? Well, if we're really going to start seeing, hey, interest rate cuts are coming, the economy is really slowing, then it is probably more than fair to think that the dollar could make its move back down to this previous low where we kind of had the same sentiment in financial markets. But maybe this time it's for real. Maybe this time we really are going to see the rate cuts come quick. Again, all the data right now is kind of suggesting that. So for me, I'm not predictive. I'm not forecasting exactly what's going to happen. What I'm telling you is that the data's been sliding. I'm going to trade that, right? Until that changes, I am going to ride what is happening, and I'm going to trend follow. That's what's, been my bread and butter over the years. But a lot of times when people hear trend following, they think looking just strictly at price. For me, it's fundamentals. The trend of the fundamentals is way more clear than the trend of price action, which can be very deceiving and very confusing to watch. That's why, again, on this channel, we reiterate over and over how important fundamentals really are. Of course, the euro is kind of loving this recent move with the dollar weakness. It broke out of this 1.088 level, which is pretty big. I mean, I think if you get pullbacks here, this is looking actually more attractive. And there's another currency pair here. We can pull up pound USD, which I actually think, I could be wrong, I need to double check. I believe this is actually getting a bullish read from the EdgeFinder. We seem to have finally actually gotten some breakout here that could be substantial, could last. So pound USD might be an interesting one if you're a currency trader to watch going into this week, perhaps on some sort of a pullback if you get it. And after looking at the EdgeFinder, I actually spoke wrong. It's actually euro dollar getting the bullish read. Pound dollar's not quite, but it's pretty close. Especially with the latest COT data, this is going to impact some of the scoring, and euro is actually getting a nice read here. Very, very curious. And I think right now the obvious trade in terms of dollar yen is to be more on the sell side. Why is that obvious? Well, fundamentalists will know that the Bank of Japan has actually talked about raising rates at the same time that the Fed has talked about cutting them. So when you get that dynamic in currency world, right, and I do trade currencies. They're not my kind of primary trading vehicle. I usually trade the Nasdaq and gold and oil, etc. Mostly. But when you get something like this is attractive to me in the currency world. When you get clear positive interest rate expectations potentially from the Bank of Japan, and you compare that to negative ones or sort of decreasing interest rates in the Fed. That's the sort of story that produces beautiful trends in the currency market as well. The currency market for me is very like, I'm either very much trading it or not at all, right? It just depends what's going on in the market. Here's a quick look at retail positioning as we go into the week. What I think is kind of interesting here about this chart is that gold continues to be a bullish contrarian signal, and that's because most retail traders are fighting this move. Thought that was really interesting and worth mentioning here. Also, with the euro, retail traders are shorting the euro, while it's, as we said earlier, the EdgeFinder is giving it more of a bullish reading. Just a couple interesting ones from this list. The AAII Investor Sentiment Survey is a survey sent out to a bunch of stock investors. Hey, what do you think about the stock market going forward? We can see there is a lot of optimism here. We're actually reaching a high since this one way back here. So this is a weekly filing. So this is since late December of 2023. We're seeing some real optimism in the stock market. Why that is actually something worth mentioning is sometimes when this gets too strongly biased, I actually take it more as a contrarian signal. So perhaps we have a little bit more room to actually pull back on the indices just from this. Here's a quick look at the seasonality scanner. This helps us to look at what markets are seasonally expected to rise or fall in the coming weeks or months. A very useful tool, not one that we talk about too often on the channel, but it is a very valuable one. So we can see that going into this week, gold is expected to have a slight rise if you're talking about historically, right? And then things like the bond market is expected to come down slightly. So you get all these kind of historical seasonality components here. This is another chart that I've been talking about when coming to seasonality, which is the S&P 500, which historically actually has a weak period during this kind of late February, March territory. So I am wondering if this pullback that we started to see on Friday could become a little bit more going into the rest of March. All right, guys, and before we end this video, I do want to also just mention, if you are looking for a broker, one thing to consider is the ones down below in the description. And yes, I know I'm just doing a shameless plug, but let me also mention that with all of the brokers that are partnered with me or affiliated with me on my channel, I have special sign-up perks for you guys, whether you're in the US, outside of the US. Several brokers will be linked down below in the description. And when you use those referral links, first of all, you'll be supporting my channel. But number two, they all come with some cool sign-up perks. So the one for, if you're in the US, there's like sign-up bonuses available. You can get free shares if you use WeBull. And then if you're outside of the US, you can get some cool free products with your sign-up. So check them out down below in the description. Just wanted to call attention to that. I hope you guys have a great trading week ahead. Trade safe, and we'll see you back in the next video.